Unit 5, we'll be going over the lending process in this unit. Specifically, we'll be talking about the Uniform Residential Loan Application, the 1003, and we'll be going through each section in the 1003. We also will have a brief discussion about the good faith estimate and a little bit about going over the underwriting process and who the players are in the underwriting process. But let's go ahead and start Unit 5 with a discussion about the 1003. And if you're following along in your manuals, this will be on page 127. We're going to break this down section by section, and this is the same way it's broken down in your book. So let's start with the discussion on Section 1. And this is the section titled Type of Mortgage and Terms of Loan. So in this section, you're going to see information on the type of loan that's been requested, the amount of the loan, as well as the rate. The disclosures are the following disclosures and everything else that follows is going to be based on the information provided in this section. Anytime there's a change in these terms, a brand new set of disclosures has to be provided. If you go down to Section 2, this is information on the property information and the purpose of the loan. Now, frequently, because these are done on a pre-approval basis, a lot of times when you look at the property address and the legal description of the property, a lot of times when you look at that section, it's going to say to be determined or TBD. And that's because early in the application process, the home buyer may not have even picked out a property. Now, down toward the bottom of Section 2, and we'll have a follow-up slide on this, this section is going to ask for the legal name of the applicants. So this has to do with how the title is going to be held, and it could be different state by state, so we'll take a look at that. Also, this is where they have to identify the source of their down payment. Okay, so this is where they have to identify where that down payment is coming from. Now, as far as how the property is going to be held, the reason it can be different from state to state is that different states have different methods of how you can hold title. So we've got them listed here. There's the joint tenants with rights of survivorship, tenants in common, husband and wife in a marital estate, husband and wife with rights of survivorship. There also could be an unmarried and two parties with an undivided interest. And so you'll see it 50-50 or 25-75. The percentages will be identified here. And then as far as if you move over to that second bubble, the estate will be held in, that really just has to do with is there ownership of the land. Okay, so if there's ownership of the land, that's just a fee simple. If there is a leasehold situation, that would be when they have exclusive rights to use the land, and there's certain rights that allow you to build on it to increase the value, but actually the land is owned by another party and leased to the buyer. The most common example, and we've got it listed here, and this is the only thing I've ever run into, would be a community land trust. Now, if we move on to Section 3, this is going to be information about the borrower. So there's a lot of information that's going to be collected here as far as borrower information. I do want to draw your attention to a couple things, okay? And that would be, besides all the basic borrower information, name, social, that type thing, there is a section where you can indicate your marital status. Now, that's important for a couple reasons. It's important for Equal Credit Opportunity Act reasons to make sure that they're not denying you based on your marital status. But it's also going to be potentially a trigger to request additional information. So if you're divorced, they may want to see the divorce decree or things of that nature. Now, if you move down to the address section, it's not as simple as just listing your present address, because the lenders are going to want a full 2-year history of residential addresses. And they're going to use that for 2 reasons. It's going to be helpful if they're verifying information on the credit report. It's also going to be helpful because they're going to want to verify a rental history. Moving on to Section 4, and employment information. This might be a little more complicated than what you originally think, because it's not just a matter of how much do you make. They're going to want to know specifics, including how long have you had this job. So they're going to want to know the length of time that you've employed on this job, but also they want to know, hey, how about this profession? So for instance, if you've only got a 6-month history on the job, but you're a plumber and you've been a plumber for 20 years, they aren't going to hold that against you. If you've had a recent change in profession and you were a plumber for 20 years, but now you've been a teacher for 6 months, then that's going to be something that they're going to want further explanation on. So they're going to want to know not only how long have you been in this job, but how long have you been doing this type of work. As far as the position, oh, sorry, I've lost my PowerPoint here. As far as the position that you held, they're really just looking for general information there. Now, if you look over at the second bubble, the job title and the type of business, this is going to help the lender understand the income versus the job of the applicant. Particularly if someone is, let's say, self-employed. So in that case, the type of business is self-employed, and then that is going to be a trigger that they're going to want additional information there. And then the lender is definitely going to want 2 years worth of work history information. So the applicant has to be prepared to go back and provide that information. And that's really just to show that you've had consistent income for the last 2 years. If we go on to Section 5, this is where you're listing specific information about monthly income and combined housing expense. So this is where they're going to summarize. So on the previous section, we got information on the sources of income. This section is going to be the numbers. Okay, so the lender's going to want to know how much income are you bringing in. If you have an applicant who's got bonuses, overtime, commissions, or any of the things you see listed there, in that case, what the lender's going to do is say, we're going to average these things out over the last 2 years. So they're going to take the total that you've received for the last 2 years, divide it by 24, and that's going to be the monthly amount that they use here so that they can average out those sources of income that are inconsistent. Okay. And then that bottom section, the lender is going to want, if they're using alimony or child support or maintenance income to qualify for the mortgage, the lender is going to want not only that to be listed, but they're going to want proof of that and that it's been, consistently received. They also want to show it's going to be expected to continue for at least 2 years in the future. So for instance, if it's maintenance income, they're going to look at the dates of that order and make sure it's not scheduled to end in 6 months. If it's child support, they're going to make sure that the child's not turning 18 and it's scheduled to stop. So this is going to be the section where they take a look at that. Also keep in mind that if you have non-taxable income, things like Social Security, the lender is going to have a policy as to whether or not they gross it up in order to help the borrower qualify for a larger mortgage amount. And that's just because since it's a non-taxable source of income, there's no tax on it, so your gross and your net are the same. So in order to make it allow you to qualify for the same amount of mortgage as somebody who's got taxable income, they take the net amount and they gross it up by a percentage, usually 25%, so that they can count that as the gross income upon which the loan is going to be based. Section 6 has to do with assets and liabilities. Specifically, this is where you're going to list, okay, here's my earnest deposit, and where did that money come from? So generally, the lender is going to want to see the canceled check. That's typically how the earnest money is paid. So the lender is going to want to see the canceled check, and they're going to want to also verify that that money has been in the applicant's account for at least 90 days. And so when they're listing all the bank accounts that they have, when the lender's looking at the application, they're going to want to take a look at anything that's been significantly different in the last 90 days. So if you've had a big deposit that went in the last 90 days, the lender's going to want to know where that came from. And if it was, for instance, a gift from a relative, that doesn't mean the application won't be approved, because there are some applications that will allow the down payment to be gifted, but they're going to want a letter saying that this was a gift and doesn't have to be repaid. So they are going to be taking a look particularly at the last 90 days worth of history and asking for any explanation of activity there that they seem to think is unusual. The rest of Section 6 has to do with other assets that you might have, and these are going to be divided into really two categories. One category is going to be the liquid assets, the things that they have available to close. So savings, you saw that listed on the previous section. This is also going to be potential down payment funds, because somebody might have stocks or bonds. However, keep in mind that they won't allow that to be counted unless that has been cashed out. So it's going to have to be fully liquid prior to getting to closing, and the lender's going to require verification of that. So if you say, hey, I'm going to be using these stocks for my down payment, that's fine at this point at the application stage, but then prior to closing, they're going to have to verify that they have cashed in those stocks or that they've cashed in that CD so that they still can track the money trail there. Moving on for Section 6, they're going to want to know other resources that you have, and that could be other real estate that you own. If you have a retirement account, they're going to take a rough estimate there, but you have to provide, first of all, proof of those funds, and secondly, it's not really considered a liquid account. And then the third point to make here is that they only want to know if you're vested, which means that you have rights to that money. Some companies have requirements, you know, that you work there so many years before, even if you left the company, that's really yours. So you're definitely going to have to provide proof of those funds. Vehicles will have to be listed, but they really aren't going to want a lot of information other than, you know, the make and the year and the approximate value. It's really just a rough estimate at this stage. The only difference there would be if somebody says, well, that's the source of my down payment. I'm going to sell this car. And then in that case, again, they're going to want, okay, we're going to need proof of that value. And then again, proof that you've sold it and liquidated that asset prior to closing. Other assets will also be listed in this section, but it really has to do with just household goods. So this is where you've just got to give very general information. Unless somebody has a particularly valuable gun collection or something, that's really the extent to what you have to list here. Now, as far as other specific information, there's a couple of things listed here that I do want to draw your attention to, because originators really this may not impact them that much. So for instance, if somebody has child support or alimony or a separate maintenance payment that they have to pay out, that's not really something necessarily that the underwriter or the lender is taking a look at. They want that information, but it's very important for the counselor to consider these amounts when you're looking at buying power. And that's because if somebody has a big child support payment that comes out of their budget, that really makes a difference on what's accurately affordable. Or if somebody has a lot of job-related expenses, you know, I have seen some clients paying really high, surprisingly high, things like union dues. Or if you're a mechanic and you have to provide your own tools, and it can be really a lot of money that some of these mechanics put into their tools. So for a counselor's purpose, this can be really valuable information, even if the lender is not necessarily going to take this into account. Now, the details of the transaction, this is going to be specifically where the client has to give specific information on the total. They're going to give them information on the total amount they need to bring to closing. If you look in your book, this section is listed on page 132. And we've got an example of it there. But I would tell you, really, they should be using the good faith estimate for that purpose, because the good faith estimate is going to have to be, every time there's a change, that's going to be updated. So that's going to be the more accurate number. But this section is so to give them an idea of the amount that they're going to have to bring to closing. Moving on to section 8, as far as the declarations page, the questions in this section are going to be used by the lender to determine if there's any additional important information that hasn't come up in any of the previous sections that they need to know. And this would be information that potentially could cause them to deny the loan. So if the client answers yes to any of these items, they're going to have to provide an explanation and more information. So that's the purpose of having this section. And again, we've got this listed in your book on page 132. And I would even tell you, you might want to pause this recording so you could go ahead and take a look at page 132 and 133 and get a better idea of the information provided on those pages. So you might want to pause the recording and take a look at that, and then when you're ready, resume. So moving on with the recording, section 103, this section here, this is really just an acknowledgement and an agreement. So you're basically just saying, look, all the information I provided is true. So that's really the whole purpose here, is to say I've provided accurate, full, complete, truthful information. So that's the whole idea behind why they have you sign this. Now, the information that they collect for, they call it government monitoring purposes, it's really for HUD. So the lenders need this information on demographics so they can report back to HUD about, who their loan recipients are. It doesn't have anything to do with the loan or the approval of the loan. So that's a discussion about all the different sections in the 1003. There's a lot of information there, and this is a really important document. So I would suggest you take some time to go through these sections in your manual. But for the PowerPoint webinar today, we're going to go ahead and move on because there's a couple other sections I want to go over for section 5. I do want to talk about the disclosure documents, and these will be listed in your manual starting on page 135. First thing we're going to talk about is the good faith estimate. So the good faith estimate, of course, it's going to have general contact information. It's also going to have really important dates that the homeowner is going to want to know. So the important dates have to do with when are you expected to close? How much are you expected to bring? It's going to be a full summary of the loan. And so the good faith estimate is one of the most important pieces of paper that the homeowner is going to want to keep track of. So we've got some really good information in your book. If you start on page 135, the good faith estimate moves clear through to page 139. So I just like to take you through a little bit. If we look at what's in your book, I think it would be very helpful. So on page 135, if you look at the general information, we've got a section listed there about contact information, who's the borrower, what's the address of the property, and that type thing. Every good faith estimate is going to be dated because there's certain requirements. If it gets to be so old, they have to generate a new good faith estimate. So you'll be able to see every date of every good faith estimate. And then the important date section is going to actually say, look, this is valid through X date. So it'll specifically tell them this is how long it's going to be accurate information. And so you'll have some important dates there that your homeowner is going to want to take care of and make sure that they pay attention to. Specifically, if you look at page 136, you'll have information there. And line 2, the estimated closing date is going to be 10 days from when the good faith estimate is issued. So it's really only going to be good for 10 days at a time, and that's going to start the day that the good faith estimate is issued. So really important information for them to have. The summary of the loan is just going to give, how much are you borrowing, what's the term of the loan, what's the interest rate. But if it's an adjustable rate mortgage, it has all that really important information. It's going to have information on what's your loan based on, how often is it going to change. Is it possible you could have a negatively amortizing loan? So it's going to be fully disclosed there. So there's some really important information there. You'll also notice that there's going to be an indication if there are any prepayment penalties. So this is the section where that's going to be checked yes or no. Escrow information, if you look at the bottom of page 137, the escrow information is listed there. And so some loans may not have an escrow account, but many do. And if that's the case, then they'll say, here's how much you have to pay into the escrow account. The summary section, if you look at the summary of the settlement charges, it'll be broken down into Section A and Section B. So Section A is really just going to be a summary of the origination charges. So that's where they're going to be identified if they're paying any points, if they're paying an origination fee. That's going to be identified for them there. And then if you look at Section B, it's listed on page 140. So I would take some time to look over that because there's some important information here in Section B about third-party charges. So that way they're going to get full disclosure about third-party charges that are accumulating on the loan. So I do think those are some really important pages in your book to make sure that you take some time and go over. And so again, you can either do that after this recording concludes, or you can pause the recording and take a look at this information now. The last thing I want to talk about for this section is just to talk about the players in the underwriting process, because I do think you know, we get some questions from our clients about, well, who's this person and what's their job? So on page 149 and 150, we've got a little bit of a breakdown for you, but I'm going to kind of go over it briefly here. So the loan processor, really the loan processor is kind of the paperwork pusher. So they're going to be the ones making sure that they've got a full, complete, and accurate file to go to underwriting. So you're going to have a lot of communication with the loan processor. Probably you're going to have the most communication with them because they're going to be the ones collecting all the information. If something gets outdated, you're going to get a call from the processor saying, hey, we need new pay stubs, or you know, we're going to need more detailed information on a particular item. So the loan processor really plays a really important role, and you're going to have a lot of communication with them. Once the full application is received and the loan processor has a full file, it's ready to go to underwriting. So underwriting is going to take a look and review the documentation, ask any specific questions. If they want additional information, this is the stage at which they might say, you know, we want to know about, you know, the divorce decree or something of that nature. So during the underwriting stage, you do have to be prepared that they may ask for additional information. Sometimes underwriting is automated. So, you know, they do have the ability frequently to do electronic underwriting because of the some of the technology that's now available. So it's not as lengthy as it has been in the past, but it still can be a, you know, still can be a lengthy process because this is where they're going to be verifying any information and just kind of looking for those red flags. Subsidies, this has to do with making sure that all guidelines and restrictions have been met. Because if somebody is using a subsidy to help, just say to help make their down payment, there are a lot of guidelines and restrictions on those subsidies. So you know, they've got to make sure that all the requirements have been met, and they want to know that this is going to help maintain long-term affordability. So they want to make sure that the clients, for instance, have participated in the counseling if that's a requirement. So this is really just to make sure that all requirements of the subsidies have been met. And then if you look at the PowerPoint, this section is not in your book, but most companies do have a quality control department, which is just going to spot check the file. And, you know, that's just going to be for due diligence to make sure that all the information has been completely and accurately collected. So although that's not identified, that also can be a player in the mortgage application process. So this will conclude the discussion of Unit 5, but there's a lot of really important information in this unit, so I would encourage you to take some time and work through that and make sure you've reviewed everything that's in the manual.